If you're struggling to make your monthly mortgage payment, this video is for you. And if you watched last week's video on how to lower your payment, I gave you 4 strategies to help you with lowering your payment. So stay tuned, stay with me. I'm going to help you lower your mortgage payment. Welcome back to the Real Estate and Wealth Podcast with me, Tabitha. And today I am so excited to help you guys with lowering your mortgage payment because I totally understand right now a lot of people are hurting. They're hurting financially, especially what's going on in just the industry, the market. People are losing their jobs. It's unfortunate. And we have to deal with these things. And in dealing with them, I want to give you some options to help you with lowering your payment to make your bills a little bit more affordable for you. Now, again, if you did not see last week's video on how to lower your mortgage payment with the 4 strategies, just click right here after you finish watching this video and watch that and then try to implement those. And if that doesn't work, then you come here and we're going to implement this strategy. Okay, so today we're going to talk about loan modifications, what they are, how do you apply for them, who they're good for, all of that. Now, loan modifications were really popular after the Great Recession when the market crashed back in 2008. And a lot of people started walking away from their homes. Many tried to modify their loans to get a lower payment so that their payment could be a little bit more affordable for them and they can stay in their home. And I am starting to see, well, recently I started seeing where these loan modifications are still coming up when people are looking to sell their home. And we'll talk about that a little bit more as well. Why should you consider a loan modification? And again, last week we talked about some other strategies that you can use. That's not really a loan modification. They're just things that you can do to reduce your mortgage, and you can do those yourself, and they can be a pretty quick solution for you. But why would you consider a loan modification? Okay, you need to lower your monthly payments because, like I mentioned, maybe you lost your job, or maybe you're underemployed right now and you're just not making the money that you used to make, and you can't afford all of your bills. Okay, another reason is to avoid foreclosure. Now, if you are in the position where you might be foreclosing your home, please don't let them foreclose on your home, especially if you have equity. If you have equity in your house, you haven't been paying your mortgage, you've been getting notices of foreclosure, contact a real estate agent. Let them help you sell your house instead of letting it foreclose. Take control of the situation. Now, you might not have any control over keeping your house because you are in foreclosure status, but at least you can walk away with some money from the sale of your house and start anew. Potentially, maybe buying another house that you can use the equity from your house to buy something else. And also, you don't want that foreclosure to go on your credit report. So having late payments is not great, but it's not as bad as having a foreclosure. You would have to wait several years before you can purchase again if you have a foreclosure on your credit. A loan modification is a long-term solution. It's not a temporary fix. It's not a band-aid on the situation. It is a long-term resolution to the situation. So, how does a loan modification work? Now, there are a couple different ways your mortgage servicer can implement the loan modification for you to reduce your payment. The first way is your interest. They can reduce your interest rate. So if you have an interest rate of, say, 7%, they can potentially reduce your interest rate to 5%, which will lower your mortgage payment. So that's an option that they can do. The second option is they can extend the term of your loan. So if you have a 30-year loan, they can extend it to a 40-year loan. Now, I'm not too big on extending the loan term because it does take you longer to pay off your house, and you gain the equity in your house a lot slower. So it's not my favorite solution. Then the principal forbearance. And the lender would take a portion of the principal balance and put it on the back end. And by taking away that principal balance, it lowers your payment. And then a payment deferral. So if you just need something that is a quicker fix, that but not long term, you can defer some of your payments and put it on the back end. You just might need a little time just to get yourself back together. Maybe you lost a job and then now you found a new job, but you aren't able to pay back those missed payments and you just need a little reprieve from making payments. So that might be an option for you. Now, who's going to qualify for a loan modification? So you have to be eligible for a loan modification. You do need to call your mortgage servicer to find out what are their requirements. They'll give you all the information that you need. But just to give you just general qualifications in order to apply for a loan modification loan, the first thing that you're going to need is to show proof of your financial hardship. So if you lost a job, you need to show proof that you lost a job. Potentially, if you're getting unemployment, that can be proof. If you had maybe like a medical issue that is causing you to fall behind, then you would need to provide that documentation. You do need to show that once they do modify your loan, that you can make those payments. So if you lost a job and now you have a new job, then you would need to show maybe an offer letter or pay stubs to your mortgage servicer to show that, yes, you might have had some issues in the past with paying your mortgage, but now you're able to pay this lower mortgage payment. So you have to show proof of that, that you can do that. Now, I want you to keep in mind, just because you apply for it does not mean that you're going to get the loan modification. It has to be approved by your mortgage servicer for you to have the loan modification. Now, how do you apply for the loan modification? Well, first, you do need to contact your lender or mortgage servicer. You need to let them know that you would like to apply for loan modification, and they'll provide you with the process on what you need to do. You'll need to provide paperwork. So we did talk about some of that paperwork that you'll need, which is proof of income, which could be pay stubs. They might ask for tax returns for the last couple of years. You would need to provide a letter for your financial hardship. So you're going to explain to them in a letter why you had the hardship and how you plan to pay in the future. And then you might need some documentation for the hardship, which could be the unemployment letter. You could show like medical bills that you were in the hospital and you just have a lot happening right now, or whatever the case may be for your hardship. You would need to provide that documentation to them. Then they'll give you an application that you would need to fill out and submit all of these documents. Once they have everything, they'll submit it in for the approval. And once you get the approval, the next step will be like a trial modification. It's usually 3 months, where they'll test it out to see, are you able to pay these lower payments for the next 3 months? Now, I can't stress or emphasize enough that during that trial period, you need to make sure you make those payments and you make them on time. Because if you do not, they can cancel your loan modification. And I'm sure that is not what you want. So make sure if you get to that point, you put in all of the work to get to that point, you have the trial modification, make the payments, make them on time. And then once the trial is over, then it goes into a permanent status where your loan is that reduced amount for the rest of the time, however you modified your loan. And the lender will talk to you about what type of modification you're doing and what to expect. So the timeline for doing the loan modification can take a couple of weeks to a few months. It depends on your lender, how quick they are. It depends on you on how quick you're providing the information and documentation to the lender. But you can expect a few weeks to a few months. Another thing that I want to let you know is that if you do the loan modification and they put that balance on the back end, so they take some of your principal, they put it on the back end, could be 10,000, 20,000, whatever that amount is. You will have a lower payment now, but you always need to remember that that amount is on the back end. Because if you do go to sell your house, that amount is going to come up. And I will tell you that I've had that situation where people totally forgot that they had a loan modification, and we were set to close in a couple of days, and all of a sudden title company finds this HUD uh, bill. Basically it's a lien on the property that comes up, and now it pretty much killed the deal. The seller could not sell their home because with that amount, it took them over. And in order for them to close, they would have had to bring money to the table. This particular seller did not have the amount of money that was needed to cover the deficit, and therefore they were not able to sell their house. You can imagine the seller was upset, but more importantly, the buyer was really upset as well. And that's because they did the loan modification a long time ago and they forgot. Now, some companies will put that balance on your statement so you can see it each month so you don't forget. If you are if you do the loan modification and you go to sell your house, you need to make sure you let your real estate agent know that you did this loan modification, and they need to account for that when they do your seller net sheet. So the seller net sheet, you come up with this sales price of where you're going to list your house. And then from there, you would subtract any liens that's on the property. So a mortgage lien, if you have a mechanic's lien on there because maybe you had a contract to do work and you didn't pay them and they put a lien against your house. You can have an IRS lien against your house. So there's a few type of liens that can be attached to your house. And if they are liens against your property that subtracts from what you're selling your house. At the end of the day, you also have some transfer taxes that you would need to pay and realtor compensation. So all of that at the end, you want to be walking away with some money from the sale. And if not, if it's a deficit balance, then that means you're coming to the table with money to sell the house. Okay. So it's very important that if you do this, that you remember and you let your real estate agent know when you go to sell your house. Now, last, let's talk about some of the pros and cons of doing a loan modification. So pros, some of them are very obvious. You get to have the lower payment, you get to stay in your home. It will be more affordable for you and your family. So that's the most obvious pro. You can avoid foreclosure if you're in the path of foreclosing on the house. If the lender is started the foreclosure proceedings, then this is a way to help you avoid foreclosure. And then last, it's a long-term solution. So it's not something that's temporary, that's only going to last for a few months. It's a long-term solution that you can count on to help you stay in your house and afford your home. Now, some of the cons of doing a loan modification: it can extend the loan term. So as we explained, it can take you longer to pay off your house. You build equity in your house a lot slower because you're paying less of the principal. And then overall, you're just going to pay more interest because you're paying over a longer period of time. Next, a con is if you don't pay during the trial period, it's going to be rejected, your application is going to be denied, and then you're going to be back in the same situation that you were in. So you just need to make sure that you can afford to make the modified payments if you do a loan modification. And then this last con may or may not be a con for you. Talk to your lender to find out if there are going to be any adverse effects on your credit score by doing the loan modification. Do they report it to the credit bureau any specific kind of way so that it can have a negative impact on your credit? So those are the pros and cons of doing a loan modification. And if you feel that this really isn't for you, then here's some alternatives. Here are a couple of alternatives that you can use as well. If your credit is good, if interest rates are better than what they were when you bought the house, you can refinance and drop the rate down. That can help you reduce your mortgage payment. You can request a forbearance, which is just a temporary pause on making your payments just because you have a short-term financial hardship that's not going to be long-term. And so you can ask for that forbearance. Then there may be some government programs out there to help you with your hardship. And I'll put a couple in the description to help you in case that may be your situation. And then last is sell your home. If nothing else works and you still can't afford your home, just sell it. Sell it. If you have equity in your house, take the money from your equity and you can invest it, like I said, into a more affordable house. Having a lump sum to put down on something can help you reduce the monthly payment that you were paying to live in this particular house. Now you can have a lower payment in another house. Or if your credit is not that great, then maybe you can use some of that equity from your house to pay your rent for the next year until you can get back on your feet. But leverage your house, sell it, get the money out, and help get yourself in a better position over the next year or so. Don't let a foreclosure happen when you have the opportunity to sell your house. Reach out to a trusted real estate professional. Just to recap all of this, is a loan modification the right move for you? Talk it over with the real estate professional. Contact your lender and ask them as many questions as you need to ask them to see like if this is going to be the right thing for you. If you need to find out how much your home is worth before you start this process, because maybe you might want to jump down to, I just want to sell my house. You can go to the description, click on the link, and find out what your home is worth. You'll get a report with 3 different estimates of what your home is worth. And if you need to talk with me, I will reach out to you and talk it over and help you decide if that is the right choice for you. If you're in the situation where you haven't been making your payments and your credit is just messed up at this point and you would like to do something about it, well, I do have a credit repair company called eCredit Repair. You can click the link down in the description if you just need to start working on your credit so that you can make moves in the future. So that's it for me. If you have any other questions, please feel free to put it in the comment section. I'm looking forward to seeing you guys on the next video. And don't forget to like, comment, and share this video with someone that you think it may help. Look forward to seeing you next week.